gold sells. Okay, so if you look at GLD, it's down, right? 15-day lows in the gold ETF. So one way to trade that, either go short that on new lows, or what I like to do is I will buy new highs in the bear or inverse, the short ETFs. And you can see that GLL is up at 15-day highs on a gap continuation. So weakness in the price of gold, okay, strength in financials like Citi, JP Morgan, BAC, and others. So we've got lots to work with, and the trick is being on the right side of it. So I'm going to welcome all of you here. The solars had been hot lately, so to speak, Canadian Solar and FSLR and the rest of them, but they're starting to show some signs of weakness. So I would not be looking for strength in solar plays next week unless they take out new 15-day highs. So anyways, welcome aboard, everybody. We start officially in just a minute. This is Ken Calhoun, your host, professional trader and president of the original trading university, daytradinguniversity.com. and swingtradinguniversity.com and eminiuniversity.com. Stock Trading Success, Trade Mastery, and over 70 other sites for active traders. Pleased to be here, and I hope you guys are having a great Saturday morning. We get started in precisely 30 seconds. Always have coffee. Coffee is a trader's best friend. Got to have coffee. I used to live in the islands, and the market opened up many hours earlier, so it's good to get a jump start on the market. Park this out of the way here for just a second, and we'll get started right here, right now. We're now on air, and welcome traders to Trading Week Ahead. This is Ken Calhoun, your host, president of the original daytradinguniversity.com, Trade Mastery, and many other sites for active traders. As always, all information is for educational use only. I'm not making any advice or recommendations about what to buy, sell, or hold. By watching this, you agree not to make actual trades, not making any performance or profitability claims per SEC regs. Anyway, remember to tell a friend about these Saturday events. Always good to see people, share the word, spread the word. Thanks for your trust. We've got yet another record turnout. These just keep growing, so that's really neat to see. We're up to 2416 right now is the current number of people registered. So thank you for your trust. It's good to see so many of you here. You may have seen me at the Money Show Traders Expos. I will be speaking in Vegas in just a week from Friday with two events, actually, on Friday, November 22nd for Momentum Gap and Breakout Trades. So you're certainly welcome to join me in Vegas. For those of you who have not yet registered, be sure to get your ticket for our upcoming Forex Live Profits. We still have seats available for the next week only. Okay, I think November 15th is the deadline on that, and that is the first live seminar I've done in 3 years. You can see ample video testimonials from traders who've been fortunate enough to get a ticket to my earlier events. And unlike other people, I'm a real trader and one of the industry's top guys. I'm not charging $2,000 or $3,000. It's only $697 for both me and the world's top Forex mentor, Peter Bain, co-founder of ForexMentor.com. So we're teaming up. He's my special guest for this event, and we'll be presenting live in Las Vegas at the MGM Grand. So if you have not yet gotten your ticket, and again, you can learn things for stocks as well. I will bridge the gap for you between Forex and stocks. So the patterns you learn can also be used for stock trading. So this is the first time in 3 years I've done a live seminar, and it will likely be quite a long time until I do another one. So I'm coming out of the bat cave, so to speak, to come out and do this thing. You can see lots of video testimonials live at the MGM Grand. Seats are on sale for just another week or so only until November 15th, because I'm going to close the site down when I get on a plane on Saturday. So make sure that you guys get your tickets for that if you're not yet on board. ForexLiveProfits.com. Last chance. Ding, ding, ding. We're ringing the bell on that puppy. Now, let me put the video GoToWebinar box back so you can see. Here's some pictures. I will have 2 Las Vegas showgirls at the events like I always do. So that's always fun. Traders have a great time. You can see they cheer. You got a comfortable group. I don't have 100 or 200 people. It's usually under 50. So we've got a good student-teacher ratio and plenty of time to ask questions. So join me. Recommended resource. There is no substitute for Bellagio, the world's top hotel, in my opinion. It's my favorite. Here's me with the president of Bellagio Hotels, Randy Morton, one of the world's top hotel executives. I would be using 1740, 1780 as major obvious support and resistance. That's the trading channel, or the support resistance channel from a trading standpoint. You want to give it a little bit further outside of that. So the trading resistance 1 would be up at 1785. So if you want to be a little cautious, like I am, wait until if and when the market gets up to 1785 as trading R1. The public, the dumb money resistance is going to be right there at just under the 1780. Technically, it'd be around 1775. I would use 1785 as my trading area above which to go long. I will go to cash, though, at the first sign of trouble. I always do. That's how you protect open profit. So if the market starts to get under 1745, I'll start going to cash, and I will be all cash in long positions if the market gets under 1735. So 1735 is the go to all cash on swings, and 1785 is start to scale in or initiate new swing trades on long trades. That's a good professional approach. So see how that works. Now let's take a look at our charts. We've got some outstanding charts to work with. First up for swing trades, let's look at Basic Energy Services, BAS, the chart. What I like about this one, I typically like things over 20 a share, but occasionally I'll throw in a couple of lesser expensive, usually high teens priced ones for good measure. You can see this took a base of 13, ran all the way up to 17, and if you look at the daily chart on this, you can see it's screaming up to new highs, the new 90-day highs. So that's a really good chart pattern to keep an eye on if it's able to take out new highs over, say, 1770 or so in the week ahead. Next up, CAH, Cardinal Health. That's a new one. I haven't traded CAH yet. I like the ascending triangle action here, right? We've got good price action breakouts. Obvious resistance at 62 was taken out in Friday's rally. Boom, flawless victory. You can see this thing's ran up from 55 all the way up to 62, so it's a 7-stick run. And stick means point in street talk for professional traders. Anyway, 7-point run in CAH. Ascending triangle popped up to new highs. Let's see if that one's able to take out 62.50 in the week ahead as well. Swing trading pick number 3 is 3D, and you can see that not only does it have a nice strong uptrend continuation here, but we've got an ascending triangle, 71.50 resistance. We're seeing it starting to squeeze to new highs. I want to see if it's able to break out over 72. And if you look at the daily chart, you can see we had some pullback pressure Wednesday and Thursday. You see Friday, a little bit of recovery. I'm still a little skeptical, and I want to see it break to 72. But look at that chart, right? 45, 46, up to 70. So big run in that lately. We'll see if 3D is able to take out new highs in the week ahead. Next up, oh wait, there's more. ELN, another cheapie. Gaps continue most of the time. For all of you, the dozens of traders who registered for my How to Trade Gaps premium webinar series, hopefully you're profiting from that knowledge. I taught you guys exactly how to trade the ins and outs of these minor gap continuations. Those are my single favorite take it to the bank, baby, plays. We have minor gaps tend to run on up or continue to take out new highs. Active traders should always be on the lookout for minor gaps that continue on up. It's institutional voting is what that is. That's a good shorthand for what a gap is. That means more pre-market buy orders on the exchange, market on open order flow. The MOO order flows, as we call them, pops it up to new highs, and it takes on a new life of its own. So we can see a nice 45-degree angle breakout separation that continues to run to new highs. Keep an eye on ELN for the week ahead as well. Next up, last of my swing trading picks, LNC, which is Lincoln National. Okay. What I like about this one is the fact that not only did the cup, once broken out, find support, previous resistance, now new support, took out new highs, but the price action was so good on Friday. Look at this thing, ran 46 1/4 to 49 1/4. It's a 3-point run on high volume. These are perfect for day trades as well, right? They're very good for intraday trading. One of the things that I teach my traders about in Trading the Open, my live professional room, is to look for moves outside the closing range as well as open range breakouts. There's 2 different inflection points. This is a good writer downer tip. One thing is, and I teach how to do this in my live room, but I'll just give you the strategy here. You look for moves anywhere from 15 to 20 cents above the closing range from the previous day for a breakout for trade number 1. Then you can scale in once it breaks the previous day's high for a 2-day high breakout. And you can see here's a secondary play. How do you know when to get out? Well, if you don't see a shooting star or a bearish engulfing, which we didn't, The other thing that I teach traders to do is look for 2 red candles in a row on the 5 minute. So if you see 2 red candles, 2 opposing candles that occur sequentially, is always what I use when I scale out of my day trades and swings on the daily chart. So if you see 2 red opposing candles, you sell at, say, 10 to 15 cents under the low of the grouping of those 2 red candles, and that's a good pattern. So anyway, LNC, that's chart number 5. For those wild and wacky day traders out there, like yours truly, one of the original .com traders, widely duplicated, or I should say widely imitated, never duplicated. My competitors copy me, but they can't copy the fact that I'm a real trader with proof that they don't have P&L screen caps of real trades, which you should always be looking for. I'm slowly squeezing my competitors out of business because I'm raising the bar. I'm visibly in front of thousands of traders telling you guys collectively to start requiring proof that people trade before you buy their stuff. Why in the world would you trust some guy who's just out there talking about charts but can't back it up with P&L screen cap proof or tax schedule Ds that they're real traders? Baffles the mind. 80% of you guys in a recent survey confirmed that yes, learning from people like myself with real P&L proof we trade is important. You know, if you're losing, it's probably because you've been wasting money on training from people who aren't even real traders. They're more marketers and salesmen than they are traders. So I won't get back on the soapbox about that, but just remember to ask for proof that they trade before you buy anything from them. That'll save you a fortune in wasting money on courses from people who pretend to trade but don't. Don't trust anybody, okay? That's rule number 1. I got a lot of buddies who are law enforcement, police, and military. Collectively, we don't trust people. We got eyes for the perps or the bad guys, the BGs out there. In the industry, I'm out there telling you guys what to look for. My former corporate training background, I used to work with SQA, Supplier Quality Assurance. Before we would qualify a vendor to sell to us, we run things through specification tests, we check references, we make sure that there's some proof of concept before we turn over the company's hard-earned money to a vendor that we would work with or partner with. Similarly, when you're hiring, so to speak, or buying courses from trading vendors, make sure that they can prove they trade. Most of them can't. They'll come up with a bunch of phony baloney excuses why they can't prove the real reason is they don't really trade. So if you simply put that one filter in front of the trading industry, that'll wipe out most of the bad people, and don't feed the trolls. Don't feed the bad guys out there. Only feed the few of us who know how to trade and prove it. All right? Okay, back to reality. Let's take a look at Best Buy. This is good for intraday trading. We had a bullish reversal pattern. I like the fact that we took out a cup into the close, a high volume close, HVC, into the close in Friday's markets. Portends well. I don't like the fact that it's inside the 15-day range for a swing trade, so not good for swings. But the opening range breaks ran 41.30, 40.80 to 41.30, 50 cents in a row, and another run from 41.4 up to 42. So that's another 60 cents for good measure. So if you get on either side of that, you're in good shape. So see if we lather, rinse, repeat, get that in play for the week ahead. Best Buy is one. And other financials out there, I like trading Citi myself. That's one of my favorite ones to trade. Citi's good for day trading for next week and swing trades for that matter. Nice runner from 48.4 to 50, a 1.5 point run. If you're looking for day trading professionally, one of the tips I can share with you based on experience of trading millions of dollars worth of stuff is you want things that have a single run of at least 30 to 50 cents before it stalls and pulls back. So that's why you generally don't want to day trade cheap instruments, and never use level 2 or total view. That's outdated. Market makers put fake bids out there. You cannot shadow the axe like we used to back in the old days. That's an outdated tactic. So make sure you're using 1 minute candles, time and sales, price action, volume. That's all you do. That's what we do as traders. You know how good my calls work if you look at my YouTube channel for some of my videos of the live room action. Anyway, so this one does run up nicely. So Citi is good for day trading, as is JP Morgan, another outstanding chart. Again, this is that closing range. See how the closing 30-minute range? Of course, my competitors are out there frantically scribbling, oh, let's copy this guy again. People rip off my university and other concepts. I'm the originator of those. Learn from the original. It counts. Who proves that he trades? That really counts. Anyway, closing range here, that would be trade entry 1. That's trade entry 2. I'm more interested kind of on the right side. I don't get paid as a trader to go back and look at what coulda, woulda, shoulda. So I'm teaching you guys pattern repetition, recurring patterns for breakouts. And so we want to see if JP is going to take out new highs over 54 and a dime or so come Monday or Tuesday, and if the price action continues on up into next week. So we'll see. For day trades, of course, we look for a loss of support. So if I go short, for rollover short, that would be, say, 53.40. For long, I might look at 54.10, 54.20 on the open to see if I can get another leg of price action for a day trade. So that's another strategy to look at. Next up, let's look at our stock gaps. ENDP is number 1. 54 to 61, a 7-point run. Again, gaps continue most of the time, despite what my competitors say, who are morons that don't really trade. You want to learn from a guy who's a real trader, I'll teach you guys. This is my 1, 2, 3 pattern. It moves up, pulls back down to 50%, and continues on up. You can see the article that I published in equities.com quite a while ago on that, the first in a series of articles. Anyway, 1, 2, 3 on a gap. We'll see if that continues to take out new highs in the week ahead. Next up, Transocean. Oil is moving nicely. You could see oil service. You could see 49.50, the resistance. This thing ran up to 50.5 and currently just under 54. So really good range up. Wow, big turnout. Thanks everybody for being here. Survey says, what are we up to? I do this to prove, again, I'm a big fan of proof. Okay, 2418 registered. That I'm not photoshopping or anything. This is my live. I'm logged into the administrator's area, and proof, I'm clicking on the refresh, and you can see it's refreshing my logged in area. 2418 registered. All right, so thank you for making these popular. You could see why. I'm a mechanic. I tear apart the freaking markets for you guys and teach you how to booyah, hit those puppies. 54 the resistance. See if Transocean takes on up to new highs. 49 to 50. It ran from 50.5 to 53.50. And again, my apologies for not enabling text questions. With so many hundreds of traders here, I can't be fair and answer all the questions, and it's not fair to just answer 30 or 40 questions and leave the other 100 questions hanging kind of thing. So instead, I just closed down the Q&A posting in these free events. But you're certainly welcome to participate in my paid events in my live room, in which case I do have Q&A, like the Swing Trading Success event from last week. I stuck around a full half hour later to answer all the questions that everybody was asking. So anyway, that's another bonus. Transocean, keep it on the radar. I'm going to look for new highs to buy over 54.50 in RIG. Next up, Symantec, SYMC. It's great. My competitor's going, how can we compete with this guy? He actually trades, and he knows how to trade, and he's a world-class teacher, and he's got so many people with him. What do we do? Help. Well, my competitors can approach me to be affiliates and maybe sell my stuff, which is real trading based. Anyway, 1, 2, 3 pattern in Symantec. I call this one, I believe this was on the list from last week, and it did slowly start to grind its way up. It's though right now though it's at the 1, 2, 3, it's at resistance. So the better play would be to fade short it on new lows. Okay, I'm going to say 22.6. That's my favorite play on a bounce because gaps usually continue. This one did do a rare bounce. I'd rather short new lows. If it does take out new highs, keep it on the radar for potential long. Last of our gap charts is Weight Watchers, which went on a diet. Oh, look at that. I hate when that happens. 40 all the way down to 34. A 6-point, boom. And it bounced a little bit, kind of dead cat bounce. We see a bullish hammer right there. Started to bounce just a wee bit, and you can see we're currently 34 major whole number resistance. So I want to see if that's able to move. Again, this one I would rather short on a loss of 33 than buy every day, any time of the week. I'd rather short this here than buy it there. But keep an eye on either of those to see if Weight Watchers get some action next week as well. Okay, we're going to look at our ETFs, and then our E-minis, and then our currency charts. Okay. So what do I have for you guys? Oh, I've got a coupon code today that's good for today only for an upcoming event that I've got scheduled as well. It's under $100 with the code. So anyway, stay tuned for that. But wait, gold has been in trouble. Always keep an eye on your commodities, guys and ladies and gentlemen. As traders, make sure you keep an eye on what the price of gold and oil is doing, especially in conjunction with the U.S. dollar. Keep an eye on those 3 indicators. What's the U.S. dollar doing? Hint, it's been strong lately. That's a very intelligent correlation. In fact, my Forex charts today, I've got the dollar Swiss and the dollar yen are 2 of my top picks the U.S. dollar's been strong, so gold has been down. They're always inversely related, right? You know that. So price of gold is down, GLD ETF is down. The way I like to trade that is to go long in the bear ETF, in the posing, kind of arbitrage professional play. So I'll buy GLL on new highs. You can see on the daily chart, all over the map here, if we look at the 1 year, it's been consolidating. I will scale if it gets over 96 as a resistance trigger. For now, it's at a 15-day cut pattern high. So because of that gap up in the short ETF, I want to see new highs in that for the week ahead as well. Next up is the real estate short. They're also going short real estate. So interesting commodity patterns here. You could see this is the bear ETF. Show you that's the ProShares Ultra Short Real Estate ETF or ETN. So you can see SRS is up at new highs. This one is likely a good play on new longs if it's able to take out, say 22.25, 22.5 on the week ahead as well. All right, now let's change channels to our E-minis. And by the way, I've got a very good code coming up for you guys here. I've got a follow-on event coming up next month, okay? I'll give you the heads up for that coming up. But first, let's take a look at the E-minis. I'm going to simplify it from now on. For E-mini triggers, I'm just going to give one long and one short trigger. If you want more, you have to join my live trading room, in which I have daily 2 longs and 2 shorts every Tuesday, Wednesday, Thursday morning for the ES, for the E-mini traders. So that's at tradingtheopen.com. Currently not open to new members because I'm going to Vegas in a week. So, but I'll reopen it up in early December. So if you're not yet a live room member, take a look at the video screen captures of all my or a lot of my calls, and you can see how well it works. Anyway, 1778.75, just 3 ticks over the 78. Okay, so 1778.75. One of the strategies for good trading, and you can apply this strategy for anything you trade, is whenever there's a cup pattern, you want to avoid buying the right side of the cup because it often forms a congestion region, also known as a handle. You have a cup and a handle. The trick in professional breakout trading is you don't try and buy the pivots unless you have, say, a hammer off a major moving average or a bullish engulfing, a good candlestick pattern. For more on candles, be sure to learn exclusively from my colleague Steve Nissen. A lot of morons out there trying to pretend they're candlestick experts. They're not. They copy Steve. Steve's the original guy. Learn from the original. Kind of like when you go to online auction, eBay. When you want to go online big retailer, Amazon. Don't go to the second stringers who are derivative copycats. And professional breakout day trading, that would be me, not my copycats running other sites trying to be derivative. So learn from the single best resource. When it comes to productivity, learn from my colleague Brian Tracy, all right? Go to Vegas, stay at Bellagio. You know, always insist on the best. You never, what was a saying from back in the 50s, I think, was nobody got fired for buying IBM. I think that was the saying. Anyway, buy the best, and only the best is important for your success. Don't be misled by all the fancy hype from the derivative copycats out there, of which there are many. Once you're at the top of the heap there, you get a lot of copycats, like Steve Nissen does, like I do, like Peter does, Peter Bain, Forex Minute. A lot of us, we get copied and knocked off, but demand the original. Word to the wise. Test out our free stuff, right? Any of us who are top guys, go to our free webinars like these Saturday shindigs. That's why they're so popular. Test out my free stuff and see how well that works. You know, a lot of you say, you know, my free events are better than most people paid events, which thank you, I appreciate. Anyway, 1778.75 on the long, and for the shorts, 1750.25. That's what I developed for this one. And the reason for that is, see this congestion region? This is a bullish cup, an inside range, bullish cup pattern. You can see all the resistance, all these data points form a macro resistance. We want to see if we go short underneath that. So if it drops down, if we get sellers in the market. Overall, this is kind of flat, right? The overall trend, if you connect the dots on a 3-day basis, very slightly up, but mostly flat. So I'm going to be cautious right here. Okay. Anyway, let's move on and take a look at our Forex charts. Let me zoom in on this for you guys, and then we'll do a bit more. The U.S. dollar, thankfully, has been coming back despite all of our economic woes. I promise I will not talk politics about how much I don't like big government and stupid enforced mandates that cost people an arm and a leg. Oops, I did. Oh, anyway, I'm a small business owner. I like small government. That's just me. Small or little or no government would be even better. Anyway, U.S. dollar to the Swiss franc. Look at that. Boom, flawless victory. Look at that puppy. This thing ran up nicely. The dollar's Swissy, really good pattern for us. You can see it's gone from 88 888s all the way up to 92.4. So you can see a nice strong uptrend continuation, a bullish cup pattern here. Okay, you can see a congestion region there. Previous resistance becomes new support, etc. Anyway, the dollar Swiss is on the radar for the week ahead for all you Forex traders. I like trading Forex because it's easy and I can trade with a single click of a button like I showed in. You go to my YouTube channel, there's a youtube.com/trading television. I show you, I'm sorry, youtube.com/trading television. There's a video there in which I do a live Forex trade in my Interactive Brokers account to show you how easy it is, and you don't need to use all the pips and standard and mini and micro lots. You just trade the underlying number of dollars. You just type in, say, USD.CHF, and then the number of dollars you want to go long the dollar. So maybe it's $1,000 or $5,000 or whatever, and then you just click transmit with the market order, just like you do stocks and ETFs. So you don't have to worry about lots of these the artificially developed numbering that the classic Forex brokers do, at least if you use Interactive Brokers. So anyway, the dollar Swiss is good also. The U.S. dollar to the Japanese yen. What I like is the recent price action spike here that we saw back on the 8th. You can see this one ran up sharply, and overall the trend is up. It's a little wonky of a chart, but I like the fact that we've got reasonably strong uptrend continuation. Let's pull it on the 3-month. What I like about it is on the 3-month chart, we finally broke resistance over the 99. So we'll see if the dollar yen gets close to parity at the 100 yen mark coming up. But anyway, it's starting to show some strength, early signs of strength with the price action spike recently. So that's the other one. And the last of our Forex charts is the pound Swiss. So the Swiss franc, big picture, Reader's Digest version, look for strength in the U.S. dollar, weakness in the Swiss franc, right? So both the U.S. dollar and the pound have been getting nice gains against the Swissy, and you can see my classic cup patterns work very well. On my ADX strategy, breaks over 30, you go long on a session following that, and you're off to the races. So learn more at the Forex Live Profits event with interactive live charts and activities and all that coming up in Vegas. I'd love to see you guys there, and that's coming up as well. My first seminar in 3 years. And you'll learn patterns you can use. You have my word. You can use what I teach you in stock trading as well. So a lot of crossover. I used all my stock trading, professional day trading, and swing trading knowledge to learn how to trade the Forex with some minor adjustments. And I teach you guys how to do that along with my colleague Peter in Vegas coming up. So anyway, that is our Forex charts. Now, next up, I've got as a bonus, we're going to do what I call my cash charts, which are exclusively for my live room members, and I purposefully obscure the ticker for that as a way to motivate you to purchase access to my live room, which you should. Look at the videos of how well my calls work out. Compare it to anyone. Yeah, it's amazing. I saw some competitors' live trading room. They don't even show charts. They don't even explain why entries or exits are done. They just have a bunch of text on the screen and expect people to learn how to trade. That's not what you want to do. You want to learn from professional 1-minute candlestick patterns, not stupid, outdated level 2 total view crap or text on the screen like snakes on a plane. What you want to do is learn how to trade with 1-minute candlesticks and time and sales. Now, unfortunately, I'm not opening this for new members now, but just keep it in mind for next month. So anyway, here are the 5 cash charts for my live room members, the identities of which are currently in the members area. And what I like about this one, here's number 1, is a continuous uptrend continuation. Minor gap continued to run on up. These are my best charts for my live room members. Here is number 2. Really good strong price action breakout Thursday and Friday. Sequential patterns. And notice, please, the number of points on the breakout are the same. Okay, and you can learn from this regardless if you're a live room member. Look how far the open range break was, 82 to 85.50. Okay, so 3.5-point run. On Friday, 84 to 87.50. Like clockwork with mathematical precision within 10 cents. The same exact range repeats itself. So as traders, we always want to capitalize on these recurring patterns. If the price action, the average trading range is, yay tall, the next day is most likely to be this tall as well. You're not going to get something this big or something this big. It's most likely to repeat itself as kind of the default of what you want to look for as a trader. So what I want you to do is look for recurring patterns. Okay, anyway, that is number 2. Number 3 is this one, minor gap continuation, starting to fade back a bit, but does still have some volatility left in it. So keep an eye on that one. Number 4 is this one. This is one of the very best charts of the week, and again, if you're a live room member, you can log in and see the identity of this one. You can see a minor gap continuation runner from 28, now it's up to 31, so a 3-point run from Wednesday. We'll see if this gap high volume continuation continues in the week ahead as well. And last but not least is this one. I usually do not like reversal patterns unless they're like this, where you have a bear cup that then recovers the previous low. And so when the trade potential is just within this region, or to go short on a failure if it drops back down here. But in case there's a bounce here, if we did see a bullish lower shadow and a lot of volume at the low that's starting to climb back up, the climb volume, the up volume is higher than some of the earlier volume we had during the initial climb. So the recovery volume indicates that we have a short squeeze or short covering going on Friday. We'll see if that continues on in the week ahead as well. All right, so with that, let me give you the deal of the week. And I'm going to have these every single week that I can remember to. For Swing Trading Success, that was so popular. The one we have over 2 hours and 20 minutes long it ran. It was a very, very action-packed event. It was scheduled for 1.5 hours, but I had so many questions and such a huge turnout. It's my best-selling webinar of the year, so that's great. Thank you all for being there. You know how well it worked, right? Anyway, I'm doing an advanced topics session coming up December 17th. Now that's included free, so do not register here. If you had registered earlier last week for the Swing Trading Success original part 1 of the webinar series, I decided, because I had so many people register as a gift, to give them an advanced topic session. What I'm doing now is, if you have not already ordered this, and there is a code, a coupon code is SWING that'll knock $30 off the price, and it's good for today only. It is. I'm going to disable the code tomorrow. Just wait and see. I dare you to not buy it. And then click on and try and use that code in 3 days. Oh yeah, he's right, he did take it off. Anyway, I'm always a man of my word. My deadlines are firm but fair. Anyway, if you missed the earlier one, shame on you, but that's okay. I will give you the entire recording. It's 2 hours and 21 minutes, I think, is the entire runtime. In 1920 by 1080, glorious Blu-ray resolution WMV video download that you can keep on your computer for the rest of your life, right? Back it up in a safe place, so you've got a backup copy as well. Anyway, you get that as a bonus, so it's 2 for 1. Okay, so if you missed the last offer, take advantage of this. It's only $97. It's a $30 code, okay, $30 coupon code. The rest of my list will have to pay $127 up to $179, but if you guys order this now, you'll get the recordings of the one that I did just on Thursday, right? It's 2 hours and 20 minutes. It's very good. It's one of my very best webinars I've ever done, because in that one we covered all of these different topics, from setting up charts, advanced cup depth patterns that I've never revealed anywhere before, either in my articles or my other webinars. First time ever, covered a lot of tactics in the event that I did Thursday. Entries and exits step by step, how to avoid danger charts of false breakouts, how to get on combining candlestick patterns with wide range cups and narrow cups, swing trading, trade management, and the rest of it. So what I want you to do is, if you didn't order that, so do not order this if you ordered the previous one, because this is the advanced topic session is included free. As I mentioned to you, if you were there on Thursday, most of you who paid for access showed up. So anyway, you will be able to get the advanced topics access free as my gift. Okay, so if you already ordered, make sure do not order this if you ordered access earlier to the November 7th session, because I'm including that graciously as a free bonus. You're getting over 3 hours of training from me for under $100. I mean, it's a great deal, right? So the cheapest I've ever offered my webinars at. So yeah, at least in 9 years, I think, since I've had pricing this low. Anyway, the normal price on this, the 2 for 1, You will get it for $127, but if you use the coupon code and order it, let me show you how that works. If you click on order now, see how it says $127? Enter in lowercase, all right, the word swing. I want to keep it simple so there's no room for error, though I did have two guys not enter it correct. It's always somebody. Usually they're AOL users, but I'm sorry, but don't get me started. Anyway, enter the word swing and click apply, and that'll break the price all the way down to 97. Okay. So here it is, swing trading success. You click on the order button. The default is 127. If you go to the site, just type in the word swing. Okay, just type in swing and click apply. I'm new to using coupon codes. This month has been the first time I've ever done coupon codes in my life, but my wife suggested I do that because she said they're popular online with people when she's shopping for handbags and whatnot. So anyway, 97, and so it'll drop it all the way down to 97 bucks. And for that, you know, what you get is 2.5 or nearly 2.5 hours, 2 hours and 20 minutes of instant video download. I'll send you within 24 to 48 hours from our last Thursday session we did a couple of days ago. Plus, you get access to the upcoming December 17th Advanced Topics, second webinar in the 2-webinar series, in which we'll learn breakout candle patterns, professional plays. We're going to look at a lot of specific new patterns for candles I've never covered before and how to combine those with Western technicals. Okay, I'm a real swing trader. I'll teach you guys what I'm looking for in my own trades and how to trade it. Advanced position sizing and scaling. It's really important that you look for entries and exits and manage, as I do, off my P&Ls. You know, whenever I'm in a trade, my goal is to take as much money out of the trades as I can with a lot of small-sized trades that add up. It's a much more intelligent, focused, professional approach to swing trading, and any kind of trading for that matter, than, you know, doing 1,000 shares and hoping it works out. And then you do a few $500 stop losses and you get burned and you realize that's not the right way to trade. So you break it down to much smaller initial trades. And that's this strategy point for today I was going to cover for you guys. So while I'm talking here, let's cover the manage your exits with open P&Ls. And what I mean by that is I want you to decide upon a dollar amount or percentage of open unrealized P&L, might be another way to look at it, that you will protect once you're in a trade. So let's say you're in a swing trade and it's up a few $100. Like I say, $350 in the money. What I will do is I will sell and close out that entire position often at $300 open P&L because I want to lock in $300. I don't care if there is a support line that's a bit further down or a technical chart pattern that's contrary to that, because I trade for money. Okay, just like I'm a big Star Wars fan. If you ever saw Star Wars, and Han Solo is saying, "I'm in it for the money. I'm not in it for the princess. I expect to get paid." That's why I trade. The same thing. So early influence, and it's still with me all these years, 30+ years later. I'm in it for the money. So if I'm in it by $350 unrealized open P&L, I'm not going to let the market take back more than 30, 40, 50 bucks of that. So once it gets down to 300, if it pulls back and starts to drop, I'm going to close out that trade and take the money because I want to take the money out of the market. That's what I do. Kind of upfront about that, but I like to take as much. I seize the money out of the market. That's what my goal is. So anyway, and on small size, you know, to keep things relatively safe. You know, I'm not going to do 500 share trades from the get-go. I might do 10, 20, 30, 40, maybe up to 100 shares, but I want to keep it relatively small and do a group of trades. Even if it means I take little itty-bitty wins and itty-bitty stops, you know, the goal is to walk out of the market with more than you've donated back, even if a lot of your trading sets are small size. Okay, so anyway, I'll teach you how to do that. You know, once you're in the money by whatever unrealized P&L in the trade, you want to try and capture as much of that as you can, and it all adds up. You know, I'd rather make $1,000 by getting 10 $100 wins than trying to get $1,000 win, because to get there, the path to get there in my trades will have meant that I will have kept very small stops on everything that I do. So even if I get 60, 70% of the trades wash out with scratch trades or small stops, it's the other 20 or 30% that I've scaled into that make up for it. Okay, and that's a good, for more, learn from Van Tharp on position sizing, but scaling and being able to appropriately add to winning trades over time is the right way to trade. I wish I had known that back in the 90s. I didn't start sizing till the mid 2000s. I didn't, 8 years ago. So I learned that the hard way. I would save you, a lot of struggle and large initial stop cost and the rest of it as a goal. It's just from one trader to another to help you guys. Now again, who else in the industry can teach traders based off of real trading examples, hundreds and hundreds of them like I do? I think that's really important that you start asking that question of all the educators. Most of those guys are flim-flam artists that are 90% marketers and salesmen and 10% wannabe traders. Virtually, very few of them are actual real. The coupon code is SWING. Swing for small hits, or if you're a golfer out there trying to swing for the making a decent fairway hit, and just like in golfing, it's a good analogy too, by the way. In golfing, it's not about making 300-yard fairway hits. It's all about your short game, right? And the middle game. It's all your points, and we're trying to get to. Most of the golfers never make it to scratch golfer, making par, and most traders never make it to even being scratch traders, right? They just donate to the markets. Well, as is the case in golf, it's the short game that counts. In trading, it's all about making small trades that add up that count. It's all the additive effect of all well-made small trades that add up like a professional trader does. It's not about making these big, huge trades based off of moronic chart patterns or red arrow, green arrow software. That's not how you guys really trade. The truth of the matter is it's much more about, my quote is, trading is a lot more about the math, the P&Ls, the money, than it is the chart patterns. But since most of the educators out the educational industry aren't real traders, they are not capable of teaching you how to trade based on. That's it. I hope I made a compelling case for getting involved with that. And again, I'd love to see you guys in Vegas. If you're able to get on a plane, the good thing about, even if it's late and you procrastinate, I procrastinate about some things like, I don't know, doing the yard work or that kind of stuff. I am not really keen on doing things that don't make money for me, but the wife, gets after me for that kind of thing. So anyway, if you haven't yet registered, the airfare to Vegas is really cheap here, all the time. Usually airfares go up the later you wait, but being that Vegas is one of the top destinations in the world, you can still get airfare from anywhere for reasonably cheap right now. So even if you have not yet gotten on the plane and registered, make sure you go ahead and do that now. That's my other offer. This is really good. Includes a half-hour coaching call with me, and if you register, say in the next this weekend or until the next 7, I think I said 7 traders have registered, I'll give you 2 half-hour phone coaching calls as one of the many bonuses that Peter and I have graciously included in this. So take a look at all the video testimonials, and thanks to all you guys who are listening who've done the video testimonials earlier. I appreciate it.